Most traders never lose because the market is against them. They lose because they never choose a battlefield. They jump from chart to chart, time frame to time frame, chasing movement instead of meaning. One moment they are confident, the next moment they are confused, and by the end of the week they are exhausted. The market didn't drain them, their lack of structure did. The 1 hour chart is where that structure can be rebuilt, but only if you stop treating it like a guessing tool and start treating it like a decision engine. The 1 hour chart is not fast, and it is not slow. That is exactly why most traders misunderstand it. It doesn't give you the emotional excitement of the 5-minute chart, and it doesn't give you the comfort of the daily chart. It sits in the middle, exposing your discipline. It shows you whether you can wait. It shows you whether you can follow a plan without interference. It shows you whether you respect process or chase outcomes. A trader who masters the 1 hour chart stops reacting and starts executing. He no longer feels rushed because each candle represents time earned, not time wasted. He understands that every hour tells a story: acceptance, rejection, balance, imbalance, and those stories repeat. Not randomly, not emotionally, but structurally. The market speaks in patterns, but only to those who slow down enough to listen. Most traders try to turn the market into a money machine without turning themselves into disciplined operators. They want profit without patience, results without routine, consistency without restraint. The 1 hour chart does not reward that mindset. It punishes impatience quietly. It lets you enter early, feel smart, and then slowly teaches you why timing without confirmation is expensive. This is why it is powerful. It doesn't lie quickly. It exposes you over time. If you can master the 1 hour chart, you can master yourself. You learn to wait for alignment instead of excitement. You learn to risk small instead of dreaming big. You learn to think in probabilities instead of predictions. And when those lessons sink in, something changes. Trading becomes quieter. Decisions become simpler. Losses become manageable. Wins become repeatable. This is not about indicators. This is not about secrets. This is about transforming a single time frame into a professional tool. The 1 hour chart can become a money machine, but only after it becomes a discipline machine. That transformation starts with how you think, how you wait, and how you act, not with how often you trade. Discipline on the 1 hour chart is not built by trading more, it is built by trading less, with higher intention. Most traders believe frequency creates skill, but frequency without structure only creates fatigue. The 1 hour chart removes the illusion that effort equals activity. It forces the trader to slow down and confront the reality that good trades are rare and patience is not optional. Every candle represents a full hour of agreement between buyers and sellers, and that agreement matters. When you respect that, you stop chasing movement and start waiting for clarity. The trader who survives long enough to become consistent learns that boredom is a signal, not a problem. Boredom tells you the market is not offering opportunity, and discipline means accepting that without forcing a trade. This is where most accounts are damaged, not by bad analysis, but by unnecessary action. The 1 hour chart exposes this weakness immediately, because it gives you time to think, and thinking makes excuses harder to justify. A disciplined trader does not ask how much he can make. He asks how little he needs to risk to stay in the game. On the 1 hour chart, risk becomes measurable and repeatable. Stops are placed where the idea is invalidated, not where fear feels comfortable. This creates emotional stability because the trader knows exactly why he is in the trade and exactly why he will be out. Discipline also means accepting losses without negotiation. The 1 hour chart will test this by moving slowly against you, tempting you to interfere, adjust, or hope. Hope is not a strategy. It is a delay in accepting responsibility. When discipline is strong, the trader allows the trade to fail cleanly. That failure is not personal, it is informational. Over time, this mindset compounds. The trader begins to trust his process more than his feelings. He no longer needs constant feedback from the market to fee. Confident. Confidence comes from repetition of correct behavior, not from winning streaks. The 1 hour chart rewards this because it limits the number of decisions you can make, and fewer decisions mean fewer mistakes. Discipline turns waiting into work and restraint into skill. Eventually, the trader realizes that the market does not pay for intelligence, it pays for consistency. Consistency is nothing more than discipline applied daily, quietly, without drama. When discipline becomes automatic, the 1-hour chart stops feeling slow and starts feeling precise. Every trade has a reason. Every loss has a boundary. Every win is a result of patience, not prediction. This is how discipline transforms a simple time frame into a professional tool and turns trading from emotional struggle into structured execution. Confirmation is the difference between an idea and a position. Most traders act on ideas because ideas feel intelligent. Confirmation feels slow, boring, and restrictive, which is why it is ignored. On the 1-hour chart, confirmation is not a luxury, it is protection. It is the market showing its hand, instead of you guessing what it might do. When traders anticipate, they place themselves emotionally ahead of price. When price hesitates or pulls back, fear appears, and fear leads to interference. Confirmation removes that internal conflict because the decision is no longer personal. The market has already moved. The trader is simply responding. This shift changes every thing. Waiting for confirmation reduces overtrading, reduces emotional attachment, and reduces the need to be right. The 1-hour chart provides confirmation through structure, not speed. It shows acceptance above levels, rejection below them, and failure where momentum was expected. These are not opinions, they are behaviors. Traders who ignore this enter early and spend the trade managing emotions instead of managing risk. Confirmation aligns timing with probability. It does not guarantee success, but it ensures the trade is justified. Over time, the trader learns that missing trades is cheaper than forcing trades. Capital preserved is opportunity saved. 1-hour chart teaches this lesson repeatedly until the trader either accepts it or leaves the market. Those who accept it stop chasing breakouts and start waiting for validation. They understand that patience is not passive, it is selective. Confirmation also simplifies exits. When you enter with confirmation, you already know where you are wrong. This clarity removes panic. The trade either works or it doesn't, and both outcomes are acceptable. Anticipation creates fantasy. Confirmation creates structure. Structure creates calm. Calm creates consistency. Execution is where most traders fail because execution exposes commitment. Planning is comfortable. Analysis feels productive. Execution carries risk. The 1-hour chart forces execution to be deliberate because it removes urgency. There is time to second guess, time to hesitate, and time to break rules. This is why discipline must be internal, not situational. A trader who executes well on the 1-hour chart has already mastered impulse. He knows his entry before the candle closes. He knows his stop before the trade opens. He knows his risk before profit is even considered. Execution becomes mechanical, not emotional. This does not mean trades are easy. It means decisions are final. The 1-hour chart rewards this finality. It punishes hesitation and half-commitment. Traders who move stops, reduce targets, or exit early are not reacting to the market. They are reacting to discomfort. Execution demands acceptance of uncertainty. You place the trade knowing you may be wrong, and you accept that outcome fully. This acceptance is power. It removes fear because fear comes from resistance. When execution is clean, losses are contained and wins are allowed to develop. Over time, this creates trust between the trader and his process. That trust is more valuable than any indicator. The 1-hour chart becomes a testing ground where execution quality is refined. When execution is consistent, results follow naturally. Not immediately, not dramatically, but steadily. This is how execution turns probability into performance and transforms a simple time frame into a reliable trading machine. But consistency is not the result of market conditions, it is the result of behavioral alignment. Most traders believe consistency comes after they find the right straight. But consistency actually comes after they stop changing strategies. The 1-hour chart exposes this truth because it does not allow constant adjustment without consequence. Every time you change rules mid-trade, the chart shows you the cost in slow, painful movement. This is where discipline is either built or broken. A trader who seeks consistency must first accept repetition. Repetition means trading the same setup again and again without modification based on recent outcomes. The market does not reward creativity in execution, it rewards stability. On the 1-hour chart, stability is visible. Patterns repeat, reactions repeat. What fails is not the setup, but the trader's ability to execute it the same way under different emotional states. This is why most traders experience random results even with a sound method. They are inconsistent operators using a consistent market. The solution is not more analysis, it is fewer choices. One setup, one entry logic, one risk model. When those variables stop changing, consistency becomes possible. The 1-hour chart supports this by limiting opportunities and forcing selectivity. Selectivity is not missing trades, it is choosing trades. When you accept that most hours offer nothing, you stop forcing meaning into noise. Over time, this creates rhythm. The trader no longer feels pressure to trade. He feels pressure to wait correctly. This shift changes the emotional relationship with the market. Trading becomes procedural, not react. Losses. Stop feeling like failure and start feeling like operating expenses. Wins stop feeling exciting and start feeling expected. This emotional neutrality is the foundation of consistency. Without it, no system survives. Risk management is where most traders betray their own rules. They plan risk calmly and abandon it emotionally. The 1-hour chart makes this betrayal obvious because price moves slowly enough to tempt interference. Traders widen stops, reduce targets, or exit early because discomfort grows with time. Proper risk management is not about being right, it is about staying solvent. On the 1-hour chart, risk should be defined before entry and never adjusted afterward. This creates psychological safety. The trader knows the maximum damage before the trade begins. This certainty reduces fear and prevents impulsive decisions. Small, controlled risk also protects confidence. A trader who risks too much becomes emotionally invested, and emotional investment destroys objectivity. The 1-hour chart rewards traders who think in series, not in single outcomes. 1 loss means nothing. 10 losses mean nothing if risk is controlled. What matters is survival and repeatability. Risk management is not defensive, it is strategic. It allows you to stay present long enough for probability to express itself. When risk is respected, drawdowns are manageable, and recovery is realistic. The trader stops chasing losses because losses never threaten identity or capital. This stability is rare, and that is why it is profitable. Patience is not waiting for price. It is waiting for permission. Most traders think patience means inactivity, but true patience is active restraint. On the 1-hour chart, patience is expressed through inaction until structure appears. Structure is the market's way of giving consent. Without it, entries are emotional guesses. The 1-hour chart teaches patience by denying immediate gratification. You may wait hours, sometimes days, for a clean opportunity. This waiting is uncomfortable for undisciplined traders because it forces self-awareness. Patience exposes restlessness, boredom, and the need for stimulation. Traders who overcome this realize that waiting is work. It is the work of preservation. It is the work of alignment. When patience becomes natural, trades feel obvious. There is no rush, no doubt, no internal debate. The trade either fits or it doesn't. This clarity is powerful. It removes overthinking and reduces mistakes. Patience turns the 1-hour chart into a filter, not a signal generator. When you respect that filter, the quality of trades increases and the frequency decreases. This balance is where profitability lives. Execution is where intent becomes reality. Most traders believe their problem is analysis, but analysis is rarely the issue. The real problem appears when money is at risk. The 1-hour chart exposes this because it gives enough time for doubt to appear, but not enough chaos to hide behind. When a trader executes poorly, it is not because the setup was unclear. It is because commitment was weak. Clean execution requires accepting uncertainty fully. You enter knowing you may be wrong, and you accept that outcome without negotiation. This acceptance removes fear. Fear only exists when you are resisting a possible loss. On the 1-hour chart, execution must be final. There is no need to rush, but once the decision is made, it must be respected. Traders who hesitate miss entries, chase price, and then blame timing. Timing was not the issue. Discipline was. Proper execution means placing the trade according to plan and then allowing the market to do its work. No interference, no adjustment based on emotion. Over time, this builds trust in process. The trader no longer feels the need to watch every candle. He knows the boundaries. This distance improves clarity. When execution becomes consistent, results stabilize because behavior stabilizes. Emotional control is not about suppressing feelings, it is about removing their authority. The 1-hour chart helps with this by slowing the feedback loop. You are not reacting every minute. You have time to observe your own reactions. This self-awareness is uncomfortable at first. Fear, impatience, and overconfidence become visible. Traders who fail try to eliminate these emotions. Traders who succeed learn to operate despite them. Emotional control comes from preparation. When risk is defined and accepted, emotions lose power. The on-hour chart rewards this preparation. Losses do not shock. Wins do not excite. Everything becomes data. This neutrality is not weakness. It is strength. Emotional traders seek validation. Controlled traders seek consistency. The market does not care how you feel. It responds only to behavior. When emotional authority is removed, decisions improve naturally. Focus is the hidden edge most traders ignore. They consume endless information, watch multiple markets, and monitor too many time frames. This scattered attention creates confusion. The 1-hour chart demands focus because it limits action. There is nothing to do most of the time. This forces the trader to either overtrade or observe. Observation builds understanding. Focus means knowing exactly what you are waiting for and ignoring everything else. On the 1-hour chart, clarity comes from simplicity. One market, one setup, one execution rule. This narrow focus reduces mental fatigue and improves consistency. Traders who focus stop comparing themselves to others. They stop chasing what they missed. They operate in their own rhythm. This is professional behavior. Focus turns trading from entertainment into work. Consistency is the natural outcome of aligned behavior. It is not forced. It is not chased. It emerges when execution, emotion, and focus operate together. The 1-hour chart becomes the training ground for this alignment. It punishes impatience and rewards restraint. It exposes weakness slowly and rewards strength. Quietly, traders who persist through this process stop looking for shortcuts. They understand that consistency is built, not discovered. When behavior stabilizes, equity stabilizes. When equity stabilizes, confidence becomes real. At that point, the 1-hour chart is no longer just a time frame. It becomes a system for reinforcing correct behavior every single day. Patience is the rarest currency in trading because it cannot be borrowed or faked. Most traders believe patience means waiting for price, but real patience means waiting for yourself to stop wanting action. The 1-hour chart is designed to test this because it moves just slowly enough to expose restlessness and just fast enough to tempt interference. When a trader lacks patience, he manufactures trades. He sees patterns that are not complete and enters before structure is confirmed. This behavior feels proactive, but it is actually fear of missing out disguised as confidence. The 1-hour chart punishes this gently at first and severely over time. Price moves sideways, stops a hit, and the trader feels unlucky. The truth is simpler. The market never agreed with the trade. Patience is learning to wait for agreement. Agreement shows itself through clean structure, acceptance, and follow-through. When patience is present, entries feel obvious rather than forced. There is no internal debate. The trade either qualifies or it does not. This clarity reduces emotional drain. The trader no longer feels exhausted because he is not fighting himself. Patience also protects capital. Fewer trades mean fewer opportunities to make mistakes. This does not slow growth. It stabilizes it. Traders who survive long enough understand that missed trades are not losses. Forced trades are. The 1-hour chart teaches this lesson repeatedly until the trader internalizes it. Selectivity is patience expressed through rules. Without selectivity, patience becomes vague waiting. With selectivity, waiting has purpose. The 1-hour chart supports selectivity because it limits noise and highlights meaningful levels. Selective traders know exactly where they want price to go and exactly how they want it to behave there. Anything else is ignored. This discipline is uncomfortable because it requires saying no repeatedly. Most traders want constant engagement. Selective traders want alignment. Over time, selectivity builds confidence because decisions are deliberate. When a trade is taken, it carries conviction. Conviction is not certainty. It is commitment to process. The 1-hour chart rewards this because it respects structure. Trades taken with selectivity often work quickly or fail cleanly. Both outcomes are acceptable. What is unacceptable is ambiguity. Selectivity removes ambiguity. It turns the 1-hour chart into a filter that protects the trader from his own impulses. When selectivity becomes habit, trading becomes quieter and more controlled. Endurance is the ability to repeat correct behavior without immediate reward. Trading tests endurance more than intelligence. The 1-hour chart stretches time, forcing traders to sit with uncertainty. This is where most quit or deviate. Endurance means showing up every day, following the same rules and accepting uneven results. It means trusting probability instead of demanding validation. The 1-hour chart is ideal for building endurance because results are spaced out. You may wait hours or days for resolution. This teaches emotional stamina. Traders who develop endurance stop overreacting to individual trades. They think in series. 1 trade is irrelevant. 10 trades are data. Endurance removes urgency. When urgency disappears, mistakes decrease. The trader becomes stable and stability is profitable. Discipline is the structure that supports patience, selectivity, and endurance. Without discipline, these traits collapse under pressure. The 1-hour chart enforces discipline by removing excuses. There is time to plan. There is time to reflect. There is no reason to rush. Discipline means following rules even when bored, even when confident, even after losses. It means consistency of behavior regardless of outcome. Over time, discipline compounds. Small advantages are preserved. Large mistakes are avoided. The trader becomes predictable to himself, and that predictability creates trust. Mastery is not domination of the market, it is mastery of behavior. The 1-hour chart becomes a mirror. It reflects impatience, fear, and overconfidence. Traders who avoid this mirror never grow. Traders who study it evolve. Mastery emerges when patience is natural, selectivity is automatic, endurance is steady, and discipline is unquestioned. At that point, the 1-hour chart no longer feels slow or restrictive. It feels precise, it feels controlled, it feels professional. This is how patience becomes profit and how a simple time frame turns into a reliable trading engine.